Max Healthcare is looking at raising capital. The entire new management is focusing on cost cutting. They are looking at strategic collaboration between various hospitals, and the fact that now there is a definite uptick in the healthcare GDP, we need to understand that what is going to be the path forward for Max Healthcare now that they've raised 1,200 crore via the QIP route. Abhay Soi joins us now to take that conversation forward. Abhay, good morning. Thank you for joining us. For a company of your size, 1,200 crore is a big amount. Now, 1,200 crore, when you are raising for a management which is very cost conscious, is focused on return ratios, I'm sure that there is a strong plan in place. So I'm curious to understand that why have you raised 1,200 crore and what is the plan?
First and foremost, we were obligated to raise the 1,200 crores or thereabouts in order to meet the minimum public shareholding thresholds. So there was 6% which had to be issued, either sold by the current promoters or through a primary issue of the company to meet those norms. And the promoters didn't want to sell, so the company has done a primary issue by diluting by 6% and therefore coming close to meeting the minimum public shareholding thresholds. We will be using these funds to fortify our balance sheet as well as for future acquisitions. With respect to the company, we have a good amount of free cash flows being generated through internal accruals, which can take care of our own requirements, including our brownfields over the next 4 years, twice over. So these funds clearly are something which is going to be used as growth capital by us. But like I said, the obligation was to meet the minimum public shareholding norms rather than anything else.
When I spoke to you last, you said that you will be very conscious of the return ratios, return on equity and return on capital. With now 1,200 crore in the balance sheet, in the near term, could your ratios take a dent? Because by the time you will deploy it and by the time the maximization would happen, it could be 12 to 18 months?
No, I think it should be much sooner. The pandemic has thrown up opportunities for M&A, has thrown up opportunities for growth. If you just see what our track record has been, we've forged this company, this platform through very aggressive M&As over the last 10 years. So I would really back myself on being able to do that in perhaps a much shorter time frame than what is being estimated.
Abhay, a question which perhaps is about the entire healthcare sector. If I look at the healthcare top-down view, India needs more healthcare. After COVID crisis, it has only become more and more evident. The per capita spend towards healthcare will only increase, and private hospitals have done a great job. Yet, if I look at the market perception of hospitals, it is still considered to be an infrastructure business, where in a sense everybody is bothered about the brownfield expansion and the fact that you will have to invest continuously to upgrade your building and also the medical equipment. What is the right way of looking at the healthcare industry?
So I think if you look at from a ROC standpoint, even if I look at our last quarter's performance EBITDA, and I was to annualize that, we are tracking at about 24 to 25% ROCE. Which is a fairly healthy number. Last quarter we did 250 odd crores of EBITDA. On an annualized basis, it's 1,000 crore plus. And we annually have a maintenance capex of 120 crores. It's not a very, very large number. I think, but what you rightly alluded to and what you rightly pointed out, the hospital sector after a certain point will require to create more infrastructure. And this is entirely to cater to the growth that we are seeing. But what we also seeing is sort of a divergence of sort of investors out there. We have growth investors who are looking at hospital plays, and then you have yield investors who are looking at REITs and investors, etc. So I think what you're going to see is a collaboration perhaps between the REITs as well as the hospital plays, where the REIT investor, which look at more stable returns, but although albeit lower returns, would be getting those, while the growth investors would be looking at high yield and growth investment through hospitals. So I think it's going to be fairly exciting from that standpoint going forward. What you're going to see is perhaps the hospital companies not requiring the sort of capital that they have in the past to create assets, because these will be created in collaboration with InvITs, with REITs, and so on. And needless to say, I mean, I'd also like to add that the government has also pointed out and has offered some, there've been some dialogue and some conversations regarding PPPs in hospitals as well.
Okay, fair enough. Abhay, investors are also talking about superior return ratios, a superior case mix driven by a strong focus on clinical excellence. Talk to us a little bit more about that, what that entails, and even in terms of the response, and you've mentioned that, but the kind of investors that were looking to come in and the kind of synergies perhaps on the back of that.
Sorry, you'll have to repeat that question again.
Sure. I was talking about how investors have highlighted the fact that the company has a superior case mix, and that's driven, of course, by a focus on clinical excellence. For some of our viewers, I was just wanting you to elaborate a little bit on what that entails, and also wondering in terms of the kind of investors that perhaps the QIP has been attracting.
Okay. If you actually see, we are more driven towards the surgical side of the business. So we have a more superior surgical mix versus a medical mix. And within the surgical mix also, it's the more quaternary care, more tertiary care specialties that we are focused on. It's largely driven by oncology, neurosurgery, cardiac sciences, and we're also very big on solid organ transplants. Everything from lung transplant, heart transplants, liver, kidney, and so on and so forth. Now, our model allows us to do that. Our geographic concentration in metros, and as you would be aware that we have more than 85% of our capacity, which is focused in metros, that allows us to focus on the higher end quaternary care services. Because people from upcountry do come into larger cities still for more complex procedures. You will see a lot more of the medical tourism. So you have a disproportionate amount of medical tourism, which comes for more complex procedures to the metros. And this is largely driven by the fact that, a large amount or a disproportionate amount of superior clinical talent continues to reside in metros, and that sort of enables and allows us to cater to those kind of clinical programs. With respect to the QIP, we're very fortunate that we have been endorsed by, really the blue chip of mutual funds as well as FIIs, long-only global players. So we've attracted people. Our largest allocation has been to HDFC Mutual Fund, has been to SBI Mutual Fund. We've allocated to Motilal Oswal as well. And on the international side, it's been Fidelity, Nomura. They've been global healthcare-only funds such as Polar Capital, and Capital itself, which was existing shareholder, has doubled down, has been allocated. And so we've really had a very, very good response. We were oversubscribed, perhaps many times over. We were unable to satiate the demand of players, and we're quite happy to have the sort of, having had the sort of portfolio investors that we do have
now. Okay, great. Abhay, we spoke to you recently on several facets of the business. So what's anything that's changed in terms of strategy or trends, over the last month or two that you feel is relevant, particularly in the context of the fundraise?
I think, by and large, we are entering into a golden period for the healthcare sector. This is not only due to the huge revolution that we are having on digital health, which will help in funneling more and more patients and better conversions to IPDs. There's been a huge proliferation of insurance policies, of insurance, and insurance companies that have sold a record number of medical policies and covers. out there. This usually augments very well, and it has augmented very well for us, even through the pandemic, because we've seen a huge increase in the insurance for the TPA patients, because when you're not paying at the point of care, you would typically go to a better hospital or a better brand that insurance company has impaneled. Other than that, even international medical tourism, you had oil economies which have been huge purchasers of this globally. With their own balance sheets being under stress, they're all going to be seeking value, and we're going to see a lot of that coming. My belief is to India as well. There is, like you earlier pointed out, there has been a recognition of the contribution of the healthcare sector towards the pandemic, and then there's the appreciation for the need of creating healthcare infrastructure, because it has a huge knockdown effect and a multiplier effect on the rest of the economy, as well as on employment. It's a huge employment generator, the healthcare sector. And, we happen to be the largest exporters of nurses, doctors, medical technicians to the world as well. And you have a huge paucity out there. So it's all about, we're going to be able to train them, we're going to be able to employ them, and we'll be able to, provide global opportunities for players. My belief is India is not, hospital chains like ours, corporate chains like ours, and our peer group, we're not, only there to cater perhaps to the healthcare requirements of India, but we can do so of global requirements as well. So I think we're entering a global, a golden period, and we need to essentially accelerate all of the strategic plans that we had, over the next 5 to 10 years, over the next 2 to 3 years. So, from my vantage point, I'm seeing an extremely exciting period.
How much of your business has normalized? There are two businesses, COVID business and the non-COVID business. A lot of non-COVID business, surgeries, routine visits by patients, some of them had taken a hit across the board. How much of that has normalized?
Pretty much all the business has normalized now. By March, we have seen, there's been a huge reduction in COVID business, whereas the non-COVID business has ramped up extensively. We are, seeing 70 plus occupancy levels now, and this is primarily, if not entirely, catered to by non-COVID. This is while the international business is yet to come back entirely. It's only back to 50 to 55% of pre-COVID levels. So at a homogeneous level, we are back to pre-COVID levels, but a lot of the business, which is the international business, which hasn't come back, has been sort of supplanted, or has been taken up by domestic growth. So look, I think as far as we are concerned, we're pretty much back to the pre-COVID levels.
What would you say is the permanent cost saving for Max because of COVID? All of us have gone through our moments of realization as managers, and we've looked at all basic functions of cost, and some of those costs have become digital, some of the cost has been slashed, some of the cost has been benefiting because of productivity gains. Are there some cost levels which are permanent for you and which now will permanently add your margins?
So all our cost levels are permanent now, except for perhaps in the last quarter, we had about 15 crores of temporary reduction or transient reduction, which we call pandemic related, which included certain salary reductions, etc. All of those have been reversed by the end of the previous quarter. And in the entire quarter, the total embedded value of those transient, or what I call temporary reductions, was about 15 crores. Other than that, all of it is permanent.
Question. While we can talk about the endless opportunity for healthcare, but that's been the case for fair point. Just to wrap up today's discussion with a broad thought, which in a sense has always occupied my mind, is that if you look at the big picture argument for healthcare, it always was there. That's the nature of a country, and that's how the demographic split is. Now, if I look at the healthcare sector in India, there has been intervention by the government on various surgeries or various operations, whether it was the cardiac operation or the knee replacement. Do you think somewhere there is a fear of price control, at least in the majority of the surgeries in India? Because we've seen how this has changed fortunes for some of the Delhi-based chains.
I think what we need to do is we need to put this in perspective. I think 5 or 6 years back, we had capping of stents, and I think that is what you're alluding to. Thereafter, we've had capping of implants for joint replacements. We've had capping of cost of medicine for oncology and so on and so forth, and plenty of medicines which have come under price control under NPPA. This has entirely been a push towards transparency rather than anything else. Because I don't think at any stage the government has said, look, cap the prices of your services, cap the prices of your rooms, or cap the prices of your doctors, what they're charging, and so on and so forth. What they've said is, look, there is an opaque part of the bill, which is really on consumables and medicines, because your purchase price may be X, while and there are huge margins in that, and that is perhaps what is not evident to a patient, as well as the fact that certain bill estimates are given initially, and then when the actual bill comes, it's much more than that. So there's been a push towards transparency. We welcome this move. I think it's worked out very well for the industry, in fact, because what has happened is we've been able to charge for the services. And where you are able to differentiate yourself from smaller players, from the more disorganized players, and so on and so forth, rather than charging the same amount for medicine and implants, okay, which is a little more opaque. So this has clearly been a push towards transparency rather than capping a pricing of a procedure.
Okay, thanks for joining us this morning, Abhay. Always great chatting with you.